Hey everybody, welcome to the Hangout, and this is Dr. Barry Burns with Top Dog Trading. Today we're going to talk about momentum with the E-minis and how to use it to find trend reversals. So here we go. So we've been in a little bit of a downtrend over here, as you can see. And so now one of the ways to have a high probability trend reversal is to look for momentum. Now, remember, we can't catch every high or every low or the end of every single trend with high probability. The good news is we don't have to, and trading is not about being right. Trading is about making money. So we just wait for the opportunities that provide us with high probability trades. Doesn't mean we're going to catch at the end of every trend for every trend reversal. Again, don't have to. We just wait for those that have high probability. One of the ways to determine those that have high probability is to look for momentum shifts. So think of momentum as strength. Think of it as a train going down the track, and that train has a lot of momentum, and it's hard to stop that train. In fact, I saw in a documentary a while ago that a train that has 30 cars behind it going 60 miles an hour will take approximately a mile to stop after the brakes are applied. So that's the energy of momentum. It's hard to stop it once it gets going. And we can use that in trading. So here's our momentum indicator down here. And as you can see, momentum has been to the downside. This vertical black line here, that's the zero line. That's the line of demarcation between bullish momentum up here and bearish momentum below it. And so this is our primary momentum line, and then this is a moving average of that momentum line. And one of the things we look for is a first cycle low after the moving average turns up. Remember, this is a moving average of momentum, not of price. And so I've got it color coded here. So it's magenta when it's turning up, it's black when it's turning down. So I've got a cycle low, first cycle low after that momentum change up. Remember, it's always good to get in early. That's one of the distinguishing things between a retail trader and a professional trader. Professional traders tend to get in earlier than retailers. Retailers wait for too much confirmation. On price action, though, price action is always important, of course. And price gets above the 15, the 50 hits the 100 MA, gets into what we call a little pinball pattern here. We're waiting for to see if we can break through all of those. But this is where we get our early indication that momentum has indeed shifted. And that confirms the price action. More than confirming the price action, though, what it means is that movement up is strong. And if it's strong, then we can have a high probability trade of it continuing, because just like that train going down the tracks, it's going to have a hard time stopping. So the point is, with momentum, you can have moves up or down on price and not necessarily determine whether those are strong moves or weak moves. If they're weak moves, you could take that based on a higher high, higher low, and get stopped out because that's not a strong trend. Momentum determines whether it's strong or not. It's actually measuring whether it's strong or not. So therefore, we get back above the 100, even above the 200, and stay above that, okay? Now, it's not going to last forever. As you can see, momentum then dies down here. But that's okay. Then we take our profits. All right, moving over here, we get another one here again. Now this one is actually confirming a trend. Rather than a trend reversal, it's actually happening in a trend. So we've got price above our moving averages, and that's fantastic. But again, cycle low occurring while the moving average for momentum is up. In fact, early in that, right? It's the first cycle low after the momentum moving average moves up. So that's confirming the trade as opposed to the other one, which was confirming a trend reversal. Again, why is that important? To determine that we have a high probability of making a higher high. So I highly encourage you to add momentum to your arsenal of trading. It's very, very important, very powerful, and it will definitely improve your win-loss ratio and your risk-reward ratio in trading if you learn how to use it properly, if you use proper risk management and money management. If you'd like more information on how to use momentum, the more specifics and all of that stuff, feel free to click on the little box above and get my free trading course. Be happy to share that with you. That's my gift to you. and I love helping traders. So get the free course and learn more.